Hello traders, this is Rich Taylor from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, April 17th, 2013. We had a bounce back session where the market was able to use the oversold energy and curl back to the upside. The ES was up 25 handles and the NASDAQ bounced back 44, but the NASDAQ really had kind of a poor bounce relative to the ES. The Dow was really kind of the laggard here, really kind of trailing the performance of the other two. But we'll take a look at those charts in a bit. The advanced declines were very robust to the upside, so they're definitely going to impact the cumulative advanced decline lines. And that's something else that we'll be taking a look at. So let's move on and take a look at the major futures charts. Here's a look at the ES futures, and you can see that we have the large range expansion candle to the downside here. And today's candle was essentially just a little inside day measuring off that downside activity. The one positive for the bulls here is that we definitely closed above the midpoint of the previous down candle. Don't forget to include the true range, and the true range includes the range of the day that was traded plus any gap. So you have to go back to the previous day's settlement to include that gap. So if you go back to Friday's settlement and include that, we're up to just above the midpoint of that actual range. So that's definitely one small positive for the bulls. The negatives though are that we're still kind of in the area of the 10 EMA. We haven't reclaimed that, and we're still well below the swing high. So what we really need to pay attention to is when we leave the range of Monday's actual candle, traded either way above the high or below the low. That's going to be the direction of the next real impulse. So definitely be sure to keep an eye on that. Also keep in mind that we do have the overhead gap up here from the previous session, and then we've got one from Thursday as well. So Thursday to Friday we gap down, and then Friday to Monday we gap down. So there's two gaps above to keep your eye on. Moving on to the NQs, pretty much the same scenario. We've got the inside day here. They did try to get up into the area of the previous opening, but still an inside candle. If we break out, there's only a very, very nominal gap to fill from day to day, from Thursday to Friday, and Friday to Monday. So these are much smaller here. Back above the 10 EMA, and we're back above that 8 ace level. So we're back into the overbought territory on the Gann box here. 2851 at plus 1 ace is going to be the next real mathematical overhead for the market. All right, now looking at our multi-sector daily chart, you can see that we do have continued weakness still in the XAU. The gold stocks and gold miners were still under pressure today, while the more growth-oriented indexes did bounce back. So we have bounce back in risk on, and the risk off is still being used as a source of funds. So the risk off asset classes, the XAU and whatnot, are still being used as a source of funds here, and that is definitely oversold, but that still could continue. And markets that are oversold can almost always get more oversold. All right, now the one chart I want to focus on today is the cumulative advanced decline. We're already in trouble here on the NASDAQ side. We're still below the trend line. We still have this break. We have a qualified lower high. Here's your lower high right here. Here's the impulse low, and now we've actually qualified that by making a new low off yesterday's readings. So the NASDAQ side is definitely negative. However, looking at the broad market side, the New York Stock Exchange side, we're still above the trend line. Trend line is still holding to the upside. Definitely a positive for the overall market. The break from yesterday's very negative advanced declines was really kind of recouped by today's positive movement. So they've been able to hold this up and keep it above the trend line. So this trend line is definitely something that we're going to be keeping a close eye on as we go forward here. The SPX TLT cross took a bounce for the better, starting to move back up here towards the trend line. But this trend line here that we have broken down from is still a meaningful break. It has qualified itself. We did make a new nominal low here on this push down, so this is definitely qualified. I have to see if the bulls can circle the wagons. If they can do so, just remember we're going to have resistance here again as we approach this trend line. Now the SOX versus the NDX made a little progress here today. So that means the SOX was relatively strong versus the overall NDX. However, we're still below that key trend line and have not yet been able to recoup that. So there's no positive technical development other than an upward bias could be developing. Here's a look at the oil services in red versus the oil futures in blue. Obviously, the oil futures had a pretty rocky couple of days here as the liquidations were getting hit, and I think the commodity players were getting margin calls for the most part, and just experiencing the turmoil that was going on in the commodities markets. The one takeaway here, though, is that the oil services, the OSX, did not record a new low on the move, so it's not confirming this break in the downside in the oil futures. Probably going to need a couple more days here, but that just means that this drop in the oil futures is a little bit suspect because the oil services haven't followed through just yet. Now here in this important cross, the NDX divided by the S&P, we're actually starting to see the potential of a bottom forming. We've got this little break line here to keep an eye on at 180. We're just nudged above that. If we start developing some positive relative strength in the NDX, that would definitely be very positive for the broad market, because the broad market is so much more extended on the year than the NDX side is on a relative basis. So the NDX coming on could be something that would really support the market overall, and could potentially set the table for a rotational rally where things come out of the performance that have been really good, the biotechs and the pharmaceuticals and whatnot, and move into some more other assets within the NDX, like the semiconductors and some of the other retailing and more growth-oriented assets. That's definitely a possibility here. That would be very positive. If there's really nowhere for money to rotate into, that's when bull markets kind of perish, when everything's just kind of fully invested and fully bought up. But for now, there's still room for this to curl back to the upside. If we do develop an upside bias here, that would be very positive for the market. All right, here's a look at the 10-day trend. The 10-day trend is basically just dead neutral, 1.08, neither overbought nor oversold. We never got anywhere near an oversold reading of 1.35 or higher. So if the bears want to come out and test us some more, there's plenty of room before we get oversold. We definitely had a price shock to the downside in the market 48 hours ago, but nothing that would make the market terminally oversold. So there's room here, according to the 10-day trend, for a move in either direction if the market so chooses. All right, now here's our sector list. I'm going to click on the percent change here. It's sorted from best to worst. Airlines were the top sector. The housing sector was right up among the tops. That was one of the weaker ones yesterday. The transport average definitely outperformed the broad market. Cyclicals were outperforming the market also. The weaker areas were the gold and silver, the defense, pharmaceuticals, and the utilities, all kind of down the list. So definitely this was more of a risk on kind of a day, and something that the bulls would like to see. I think the one thing that's a little peculiar is that even with the oversold condition in the XAU, it still closed negative on the day. So keep an eye out for 3 days down. Tomorrow will be 3 days down off of this push. 3 days down oftentimes is a place where shorts start to cover and take some back, and then the longs start nibbling. So that could be an interesting thing to watch. It doesn't mean you go in blinded. We could still have some pretty good expansion to the downside, but usually that 3 days is where you get some kind of a rhythm where you can pivot back to the upside, even if it's just for a very, very short time in the minutia time frames. Okay, so looking at the major indexes, here is the SOX sector, the SOX, the semiconductors. This is definitely one of the better performers on the day. Closed up pretty much at the previous day's high, at Monday's high. That gap is still open from the weekend. If they can close that, that puts the 8 ace level in play at 437.50. The BTK bounced back fairly sharply, but keep in mind that we're 12 days up now in this seeker count, and if we print 13, that could be a place where we're either going to pause or reverse from. So if we get another little decent up day, we could be setting up for that, so keep an eye on that. The BKX index was not really as interesting and didn't perform as well as some of the other averages. We closed pretty much at the midpoint of the previous session, so this is still effectively just a measuring day or a bounce day. It did get back up into the top half of that range. That could lead you to start thinking about higher prices. So for now, this is still negative. We closed right at the 50 DMA, but we're not really able to take it out, and we're still below the short-term moving average that we use, which is our 10 EMA. Also, we're below the 8-ace level, which is the next key level on a bounce. The oil services index, the OSX, still pretty bearish here. We had a little bit of a bounce, but like we talked about before, we're still below the midpoint here of the range expansion candle to the downside. And while we did effectively, let's say, close this gap here, we're still potentially looking at 4-ace here on the downside. Why are we looking at 4-ace on the downside? Well, we still have this seeker exhaustion count in place until this risk line gets taken out here at plus 2-ace, about 257.85 or so. Now the XAU was certainly not very pretty today. We had that 3 days down. We expanded the range to the downside, and today we closed fairly weakly. Keep in mind that we frame shifted now, and the 0-ace line is now this 100 level. Closed today pretty much right around 104.5, so a little bit lower, 4 points lower. There's going to be meaningful support at that 100 level. Here's a look at the oil futures. Let me just rescale this so you can see the key levels here. Had this drop to the downside. We went lower again during the current session, but notice this red trend line here. It goes back to this 9-bar run to the upside. That's our static trend line. Those are very key, important areas of support and resistance. That is the origination and the absolute low of this 9-bar move to the upside, this 9-bar momentum move. The market used that level today for support intraday before closing up and closing about unchanged on the day. We're now back above the 0-ace level at 87.50, and if we do continue to pivot back to the upside, the next level is going to be about 90 and 5-ace, which is 2-ace, and it's going to also be just under the 200 DMA, which will now be gained. The other key thing to keep in mind here is that we are below all three major moving averages. We're below the 50, the 10, and the 200 DMA. So for now, even though the chart is trying to bounce here, the chart does remain negative in these time frames. Here's a look at the gold futures. Gold futures did frame shift off of yesterday's candle. We're definitely seeing a real acceleration to the downside. You can see the organized sell-off. You know, a little bit down, a little bit of a bounce, more selling, more selling. It's just this is just net selling, or the lack of bids. And you can see that we broke key levels here and broke to the downside, and now we're at the 1-ace level. All right, let's end with a longer-term chart of the gold futures. Here's the gold futures. This is the weekly data. I've actually compressed it down. I know the individual bars are hard to see, but just want to point out the area of long-term support here that was violated and broken to the downside. This area is, around 1525 or so, which was a level 1520, 1525 that a lot of technicians were looking at. We broke this to the downside. When we did that, we got the energy from this pattern up here to release to the downside. We had this falling wedge here that came up to retest and then broke to the downside. But what I wanted to talk about were the key Fibonacci's here. What we've done for the Fibonacci's is I've taken the breakout over the 2008 high and measured it up to the high water mark of the move. So that really effectively just measures the movement from the bank crisis, from the financial crisis, up into the high water mark of the move. So you can see the 50% line was just below that breakdown level, which definitely kicked in some selling as well. So we broke this trend line here at 1525. We broke down below the 50% line of 15 at 1485 or so. Now we've declined down to about 1380, which is the 62% Fibonacci, which is the expected retracement. If we start to lose this, then we get into this 75% retracement. And then if we get into there, we're essentially really just kind of giving up this whole run. We're probably going to wind up retracing the whole thing down to about $1,050. So a couple key areas to watch here going forward. This 1380 area is the 62% fib. Next would be this, call it 1265 area, which is actually not that far away from where we traded intraday so far. And then ultimately this the last area of support, and this is going to be very, very big support if it ever gets there, is going to be this 1050 area. So a couple things to watch here going forward in the gold futures. Remember, if we do pivot back up here, we're going to have very, very strong resistance starting at about 1480 up to about 1525, which is the origin of this breakdown. So if you want to just use round numbers, 1500 is going to be major resistance on a retest back to the upside here. So this pattern is definitely broken to the downside here, and there's definitely some short-term trades to be made, taking advantage of the oversold energy, but it's going to be very sticky for sure, especially if it gets back up to that 1500 area. So that's it for this evening. As always, thanks for listening. This has been Rich for Tradesight.